Good morning and welcome to this particular session. And today I want us to look at one CMC entry model that works across all pairs. So remember that as a trader, you don't need 5 strategies to be profitable. You need one model applied consistently. And with my interaction with traders, I've come to realize that most traders jump between entry styles. So probably today they're trading order blocks, the other day they're trading FVG, the other day they're trading breakouts, reversals, supply and demands, etc., etc. And what happens is that they end up mastering none of them. So in this video, I'll show you how one simple smart entry model that works across all pairs, so you can stop guessing and start executing. So this video is for traders who probably feel overwhelmed by too many entry concepts, struggle with consistency, want a clear, repeatable model, or understand theory but struggle with execution. So what you need to understand is that you don't need more setups. You need one setup executed well. My model that I want to show you today is a very simple model, and it has 4 steps. The first step is to identify higher time frame bias. The second step is to look for liquidity sweeps. The third step is look for market structure shift. And then you enter on the pullback, which is the fourth step, entry on pullback. That's it. Simple, repeatable, and applicable across all pairs, right? So let's go to the first step. This chart you're seeing here today, I'm on NZUSD. I know most of the time I usually do my my thing on gold because that's what I trade. But today I'm using a different pair to show you that probably this is workable, right? I'll show you that it works on all pairs, right? So the first step is to identify higher time frame bias. So start with the direction. Ask yourself, is the market bearish or bullish? Why is liquidity being targeted? Are we in premium or discount? Okay, so look at this particular session here. So this particular point, what we are seeing here is first of all, the trajectory. Here we are looking at shift in market structure. So it tells us that this piece of price action is bearish, right? We are looking at a bearish condition, this piece of price action. Okay, so and we can be able to now identify this. All right, we can be able to identify this piece of price action from that particular point all the way down to this particular level, the market being bearish, or we can be able actually to even study what we have at that particular point. Okay, so meaning that this piece of price action here, we are bearish. Okay, we are bearish. So then we have identified the time frame. So where are liquidities being targeted? So of course we have this sell side liquidity, right? We have this sell side liquidity being actually sell-side liquidity being actually what we are looking on, where the market is targeting, right? Where the market is targeting. Then now, we need to understand, are we in premium or discount? So what you need to do is you look at, you take this particular tool, and then now we mark. Remember, you're studying this piece of price action. So we mark from the highest point to the lowest point there. Okay, so that tells you anything above this point is a discount, and this is why you could be looking for selling opportunities. So let's go down to the 15 minutes time frame and see this particular concept, right? So on the 15 minutes time frame, let's look at it. So the first scenario that I want to look at on the 15 minutes time frame, you can see at this particular point, right? That particular level. So what do we have at that particular point? So here we have the shift in the liquidities being taken out, equal. We can talk about this liquidity is being taken out, right? So the equal highs are being taken out, and then now we have the market pushing on the downside, right? So we have a shift in market structure, All right, we have a shift in market structure here, and what we see is the price pushing again on the upper direction. But note, remember, above this, below this line, we are in premium, so we are not looking for selling opportunities in premium. We want to look for selling opportunities in this particular point we are discount, so we don't sell in discount. What we do is that we look for buying opportunities in discount. But remember, we've already identified this as a downtrend market, so we are not going to concern ourselves so much on buys. So we are going to go to the premium levels and see those instances that we are talking about. So when we come to the premium levels, you can see what we have at this particular point. So let's begin even with premium, where we need to begin. So remember, all this is premium, all this is premium, as long as we have above this particular line. Okay, so now we can begin here, because this is the piece of price action that we are studying. So if you look at this part of price action here, the market was still there. So then we come at this particular point, right? So we come at this particular point, you can see what we have. We have a liquidity sweep. Okay, we have a liquidity sweep. So if we have the liquidity sweep, what we want to look at is now the change of character or shift in market structure. And you can see at this particular point, we have a shift in market structure. Shift in market structure. All right. Then now we want to identify the price pulling back. Right. So when you look at this piece of price action, what we have here is the price coming to the fair value gap. Right. So you can see this particular fair value gap for those who use the fair value gap. So myself, I could not be taking an entry here because I only use the order blocks, and for the order blocks is the price to come to this particular level. Okay, so for those who trade the fair value gaps, you have your entry. So where are you targeting? Probably these liquidities here. Okay, these liquidity at that particular point. Okay, so and you have your very nice entry, and the price coming all the way down. Okay, so let's push on this. So then I come here and see the liquidity, the equal highs. All right, so equal highs are being taken out. You can see that particular liquidity. So what I want to look at this particular point is probably the market being able to give me a sign of continuation of the downside. So there we have. But now when the market retraces, it doesn't really come to my key point of interest. So I want to look at the entries, right? So what I do in that case scenario is just let the market go, because I can't gamble. I can't gamble with the market. I just let it go. So look at this particular point here. The market comes, we have the liquidity sweeps there, right? So after the liquidity sweeps, so this particular point, that's where we have our shift in market structure, right? Actually, this particular level, these lows here, that's where we have our shift in market structure. And you can see where the market retraces to. The market comes to this particular level here, where we have those order blocks. So this one now, I could have taken this particular trade, and this is how my setup could have been. So we have that. Okay, my stop loss being there, and me targeting probably these lows here, right? Maybe targeting these lows there. So look at it this way. So this is a very nice trade, right? So the price comes to the entry. There you can see time confirmed 0930 during the kill zone, right? So and then the price displaces or pushes down. So as the price pushes down, you can see the price came all the way to about all the way down here, missing the TP by a few pips. Remember the TP, I'm looking at this particular level. Okay, so that's why I'm looking at the TP at that particular point. The price, these are risk to reward ratio of 1 is to 3.6. So the price comes almost to my TP, and then now it pushes on the upper direction. Remember, I've always advocated for putting, once the price is half your target, you can take partials and put your stop loss at break even, so that you can mitigate this kind of reaction, so that you don't end up sniffing at the TP and then the price are retracing to hit your stop loss. Okay, so then the market pushes up. What do we see? The market comes all the way here, and we have the price give us another liquidity sweep. Okay, we see those liquidity sweep. So after the liquidity sweep, then what we want to look at this particular point is the displacement, all right, or the shift in market structure. And that's where we have the shift in market structure. Remember, this liquidity sweep, this is the buy side liquidity, so it has been taken out, all right. The buy side liquidity is there, been taken out. So here we have a shift in market structure, all right, shift in market structure. And then now we want to see the market come to our order block. Remember, this is where we have our OB. Okay, that's where we have our OB, and you can see where the price comes at this particular point during the London close the kill zone, and then you get your entry. Remember, we are only looking at selling opportunities, and we are selling in premium, right? We are selling in premium. So above this line is premium. Okay, so that's why we want to look at sell entry. So if I take a sell there, I will be targeting probably these liquidities. All right, I'll be targeting these liquidities. Okay, and also maybe probably I can target these liquidities here that were not hit, right? See these liquidities here that were not hit, so I can actually be able even to target them, right? And you can see how the price drops all the way down to those particular level, a risk to reward ratio of 1:6.87. Okay, so very good, a very nice setup, a very nice setup. Okay, so then we see how the price is pushing here. So the price comes again to the premium levels. So it takes out these particular liquidities. The buy side liquidities are taken out, right? So it actually even takes out these one too. The liquidities, they are being swept, right? So that is the buy side liquidity, and here we have the buy side liquidity. Remember, we are only looking at selling opportunities, right? Remember, we are only looking at selling opportunities. So when we talk about the liquidities, so which is step 2, this could be probably equal highs, right, for this kind of a scenario, because we are bearish, so we are looking at equal highs. It can be obvious support and resistance levels. It can be previous session highs, right, or even previous session highs, so they can be taken out, and then we see the market react. Okay, so and then always you need to understand that the sweep clears weak traders and provides a fuel, and therefore if you see no sweep, therefore the setup might be low probability. Okay, so then step number 3, right, now after we have identified the sweep, step number 3, we come and look at the market structure shift or change of character. And here we have that particular scenario where we have a change of character, right, change of character. So after liquidity sweep is taken out, you need to wait for that market structure shift or change of character. This shows that control is changing. For instance, in this bearish scenario, wait for bullish liquidity sweep, which has taken place there, and then look for a bearish market structure shift. Here we have seen the choke. So this is our confirmation. Okay, this is our confirmation. Then step number 4, entry on pullback. So we wait for the price to pull back. So when the price pull backs to this particular point, here we have a fair value gap, right? We have a fair value gap. So the price comes to that particular point, and then now we see the price displace. Okay, we have the price displace. So for the order block, I could be waiting for it here, but the market did not come to that particular point, and then now we see the price push on the downside. So on these levels, we are in premium. So I'm not concerned more on looking at selling opportunities in premium. Okay, so that's how I'm filtering. Probably let's go even to another pair, maybe probably USD CHF. Okay, so we go to another pair, maybe probably USD CHF, and we go to the daily time frame. So on the daily time frame for this particular pair, what we can see here, the market was bullish. Okay, the market was bullish. So, but as it pushed down, it pushed up. So at this particular point, that's where we see a shift in market structure. right? So then now we mark the area of interest that we are looking at. So from this particular level to that particular point, that's what we are looking at in terms of buying opportunities. And then now we come and mark the premium and discount, right? So those highs and these highs here and these lows here. So because we are looking at a bullish scenario, so here we are looking at buying opportunities. We go to the lower time frame, and remember we are buying at premium, right? We are buying at premium, so we come here. So remember we have done the first step, so to identify higher time frame buyers, right? And then we come to the lower time frame to look for liquidity sweeps. So remember, this is where we are studying our piece of price action from. So at this particular point, I see some equal lows here being taken out. So there we have a liquidity sweep, right? So then we see the price displace, right? We see the price push up. And for this case scenario, I could be waiting for the price to come here for me to be able to buy. This is where we have the order block, right? This is where we have the order block. But the price didn't really come to that particular point. So we see the price continue pushing up, right? So it continued pushing up almost to the premium level. Then it pushes, then the mean threshold. Then it pushes on the downside. Look at this particular scenario now. When the price is pushing on the downside here, so we see the price comes all the way this particular point, pushes all the way down, right? Pushes all the way down. And at this particular point, it revisits these liquidity areas here. Remember, we had an order block that was not mitigated. So it comes all again to that particular point, and it takes out these particular sell side liquidity. So from this particular point here, we have our shift in market structure, right? We have our shift in market structure, and we see the price retrace again down to some levels here, right? Down to around this particular point. And then now we see the price push up. So if you're using the Fibonacci, I think this was a very nice entry, right? If you're using the Fibonacci retracement and extension, so the price comes there, even though not during the kill zone, so meaning no entry anyway. So then we see the price displace on the upper direction. So what happens here again? We come at this particular point, and we see the price take out the previous Asian lows there, right? So then it pushes up, then it retraces again. But now look at this particular point. It also comes and takes out the previous session's high. So the New York, during the New York session, it comes and takes out these New York lows, right? So we see the price push up. So here we have a shift in market structure, and then now these retracement. And around this particular point, you can have your entry, right? You can have your entry. Another good one is this. Remember, I'm using the session low. So this is the New York session low. Liquidity is being swept. The price that pushes up creates a shift in market structure there, right? Create a shift in market structure, and then now it comes back to the order block, right? It comes back to the order block during the New York kill zone, and there you have your entry. Okay, there you have your long entry at that particular point. So you have your stop loss there. And now, where will you be targeting? Of course, looking at these particular liquidities, right? So we have the liquidities there. If you look on the upper direction, yeah, that's where we have those major liquidities. And then there is the liquidities here for this particular day, and also the liquidities here. Okay. So those are the liquidities that we are targeting. So you see your entry, the price comes there. That's a risk to reward ratio of 1 is to 12.47. Okay, 1 is to 0.47. If you could have held the trade probably for a couple of days, we see the price coming all the way to these particular liquidities. Okay, so if you could have held probably, the price comes to that particular point, right? So this comes to our target there initially. Remember, we are still riding on these OB. So the price comes to that particular point. This is a risk to reward ratio of 1:25. And how many days? 1, 2, 3, 4 days, right? So swinging for 4 days and you get your very nice entry. Though myself, I'm not a swing trader, so I could only forecast all the way to this particular point, and then now I wait for another session so that I can be able to look for some other trades. For instance, let me push these back to this particular level and mark probably where I could have waited for the price to come to. So then after that, the next time, what I'm seeing here is the price taking out those liquidities, right? So, and after the price is taking out those liquidities, then what I want to look at is this shift in market structure. And then now we have the OB, the price coming to the OB, and then there we have another entry. All right, another entry there. So that is a long entry, that particular point, stop loss there, and of course targeting these liquidities here, right? These liquidities there, risk to reward ratio of 1:6. So the price almost comes to the stop TP, but then it retraces. So this case scenario is where you put your stop loss break even half the target. Always remember, whether even in this scenario or whichever scenario, once you have your targets a half the target, you take partials and put your stop loss at break even, right? So we have that. Then the price pushes all the way down again here. Of course, we have um, these liquidities being taken, right? We have those liquidities being taken. And here we have shift in market structure. Okay, shift in market structure. And the price retraces to the order block. So this is the order block level. And you have your very nice entry here during the London kill zone, the New York kill, the Asian kill zone. So, and that's how you get your long entry. Okay, so you have your stop loss slightly below there, and of course targeting these highs, right? Targeting those highs. So that's a risk to reward ratio of 1:11.09. So remember, the price continues to push up, taking out actually even all these liquidities that we have been talking about. All those liquidities pushes up all the way to this particular point. So you can see really it's really quite a high probability scenario of you looking at trades, right? So the challenge that I can give you, basically the challenge that I can give you is to backtest, so that now it can be at your fingertips and you're able to understand how to go about it. Remember, the first step, higher time frame bias. So here you start with the direction. You ask yourself whether the market is bullish, bearish, or consolidating. So you also want to see where is liquidity being targeted, and also you identify a win premium or discount. So this defines your intent, because without bias, the model will fail. Then you go to step number 2. You can go down to the lower time frames and wait for the price to take out liquidities, and this could be equal highs or equal lows. So for bullish trend, we are looking at equal lows. For bearish trend, we are looking at equal highs. Then look at the obvious support and resistance levels, then previous session highs or lows, depending on whether you're bullish or bearish. Then the sweep, the reason for the sweep is that it clears weak traders and provides a fuel. So no sweep is equals to lower probability entry. So you don't take such kind of trades. Then step number 3, you look for the market structure shift. And what you need to understand is that after liquidity is taken, wait for the structure shift or the change of character. And this shows that control is changing. For example, in a bearish market, wait for bullish liquidity to sweep, then bearish shift in market structure. For a bullish bias, wait for the bearish liquidity sweep, then a bullish market shift in market structure. So this is basically your confirmation. Then now you go to the step number 4, your entry on pullback. So you wait for the price to retrace and you enter at maybe probably fair value gap if you trade them, order blocks if you trade them like me, or a refined zone. It can be a supply zone, maybe, or a demand zone. What this does is that it gives you better risk, tighter stops, and clear invalidation. So you're no longer guessing, you are reacting to confirm the structure, right? So why do this model works? Like I said, before even we talk about why this model works, make sure you backtest using different currency pairs, different assets, and see how it functions. But this model works because it aligns with the liquidity, why price moves, it aligns with the structure, what price is doing, and also the timing, when to enter. Remember, I've been advocating about structure, liquidity, and time. So these three concepts are very well captured in this particular model. So, and this model also avoids you having early entries, you chasing the market, and also trading from emotions. So it forces patience and clarity, right? It forces patience and clarity. So you can take some time. The model is very simple. You define the buyers, you wait for liquidity, confirm structure shift, then you enter on pullback. That's all you need. You don't need complexity, you need consistency, right? So in the next video, I'll be talking about knowing why knowing a strategy isn't the same as being a profitable, because understanding the model is one thing, executing it consistently is another thing. Until the next video, keep safe.